Hey guys, welcome to our live zone trader, also known as Simon Davis, here with my Forex Funds community live. And I'm going to talk about basic ICT concepts. If you're a trader and you're using indicators and you're not going far and you're trading fast, then I advise you to take your indicators off your charts and actually truly learn price, because you won't go if you're not going far with your indicators now, you never will unless somebody teaches you how they do it. Price is linear, guys. Price is not diagonal with lines like this, and I'll sell this, but then I'll get taken out here and then I'll miss this. No, price is linear. The way you would have caught this move was off this bearish order block, which is the last up candle before the fast down move. Price returns to it. You sell into this last up candle here. So this smart money ICT simplified. There's 3 moves: order block, breaker, turtle soup, which is a run on stops. And also there's liquidity above and below market. So there's 4 major things you need to know. We've got an order block here, which I've mentioned. So last up candle before fast down move, price returns into the order block. You can then look to sell. And price is ultimately just protecting this area with this order block. When you get into the order block, you drop down to lower time frames, which I'll do later on. So, and drop down to low time frames to find an order block, a run on stops, or a breaker within that area inside of a kill zone, which is between 7 p.m. and 10 p.m. GMT time, or 12 p.m. to 3 p.m. GMT time. Those times vary with daylight savings times an hour or so. So the last down move before the fast up move is an ICT bullish order block. So we've got a bearish order block and a bullish order block. And with knowing the order blocks, breakers, turtle soups, and learning what each candle means, you can then read price action like music instead of just relying on indicators that lag. I do have the RSI indicator. It's very helpful for me. Spent years of learning how to read it properly, so it really helps. So we have a breaker here, which is basically a failed order block. So this is on the hourly time frame. I like to analyze on the hourly time frame. On the daily, this is direction. So are we going to respect this daily order block, or are we going to break it and turn breaker and go higher? Who knows? Only time will tell. Trade what you see, not what you think, where you think the market's going to be heading. Daily direction, you can use 10 and 20 EMA if you want to. It'll look a bit like this, but it's a bit lagging. But for new people, it helps with daily direction, because you need a bias in mind, whether you're buying or selling. And obviously, have your, if it's going down, have your top one red. So you can see on Great Britain USD on the daily that price is going down up pretty much for the last few weeks. So the best thing to do is not really look for buys on the way down. Order price is fractal. So whatever you see on one time frame, you see on all time frames. So if you can find an order block on a 5-minute, you can also find it on the monthly, breaker on the 5-minute, also on the monthly, and every single time frame. So each time frame, you zooming into price further and further and further. And when you're trading, the smaller your stop loss, the bigger the risk to reward. The bigger the reward. So this is a daily order block. And you can also drop down into the hourly time frame to find an hourly order block inside of the daily order block. And this is top-down analysis. Obviously, I wouldn't keep the EMAs on for the hour, but doesn't matter. So like I said, inside of a daily, from the daily to the hour, you can find the breaker, which I've not spoke about, because I go off on tangents, but I'll throw a lot of information your way. And if you're taking notes, or you can rewatch the recording, it'll be very helpful for you in your trading. I'll talk about breakers on the hour now, but there's a breaker here because it's last down candle before the fast up move that runs the stops. And you see like a high and a higher high get broken. Then we're turning into a bearish market. And there's an order block here, fast move away from the last up candle, price returns, you can look to sell. And off this would have been beautiful. You could have caught the whole range going down, the whole move going down off this one candle, one order block. So I'll go back into the hour and I'll explain more about each setup. We've talked about order blocks and there's a breaker here. So breaker here is a failed order block. Price moves away from price moves away from the last up candle to run stops here, which is a turtle soup. Which I call it, ICT calls it turtle soup, but it's a run on stops or a stop hunt. Basically, they're clearing the path of all the you can imagine all the stop losses below here that are building up. That's what these lines indicate. It's a fib, but I'm just indicating the lines of the stop losses all below here that get taken out. So this clears the path ready for you to buy. And when it breaks this breaker, it's confirmation that this is actually a run on stops and not a break of structure. And then once you see an order block get respected around the breaker area, you can then look to buy as well. So more examples are order block here, fast move away, price comes down inside of London between 7 and 10 o'clock, drop down to lower time frames, you find a breaker, turtle soup, or an order block in that area to buy from. You would never, ever, ever sell if it comes into this candle. You wouldn't sell it because it's a bullish order block, you know? You would only look to sell if it goes through it, closes, and then continues down further. You would look to then sell. Order block that fail act as flip zones for the market. This is true support and resistance. None of this line stuff over here that people are drawing and stuff like that. Like I said before, guys, price is linear. It's not on a 45-degree angle or anything like that. It's linear, which means on a horizontal, I'm trying to delete this line. It's horizontal. It works horizontally. So not diagonally, like people drawing trend line. I mean, they do work. Everything works in the market. Everything works in the market, everything, but not all the time. And the things that works all the time is smart money, knowing it properly. Indicators work sometimes, break of structures work sometimes, but then they won't as well because they'll fake you out. Well, break of trend lines. So I don't draw trend lines like this. If it looks easy, you can go back and back test it and do that, but that's not the way to go about it. Price is linear. Because again, here you see that they've ran the stops all here below this low. Once price breaks this failed breaker, we are in bullish territory, and then we look for buys. And we can look for buys off bullish order blocks, carrying up the market. Hope you're keeping up with this, guys, but it's very informative. Also helps breaking through the 50 RSI for confirmation that we are in bullish area. You see, breaks through, respects, and carries on higher. Liquidity I spoke about is basically invisible stops below market. So imagine all the stops below the market here. All the stops are below market equal lows. All the stops are below market here. So price will want to eventually come down, take them all out. So if you see an order block getting respected up here, price goes up, say for instance, into an order block and then drops, it'll take out this low because that's liquidity that the market's building up. Equal lows, build liquidity. Again, like here, equal highs, built liquidity. And all these stops got took out. So the move, this goes saying so messy now, but it doesn't matter. The move that's set up to run the stops here was this order block here. Price ran away fast. And listen to my lingo, fast. It's got to go away fast, not slow. All the slow candles, I say to myself, all the slow candles are like retail candles, but all the big candles that are fast, or the candles that move fast, are more like institutional. So all the little ones are, it's not right, because we don't have any effect on the market at all. Retailers don't move the market one bit. There's not enough liquidity in the market, retail traders to move it at all. It's all the institutional banks that move the market. We have stops above here as well. So equal highs are above here building. So chances are we'll pop through there before we go down. Right. So that's a mess now. I'm going to clear that and start again. So what we've covered so far is directional bias on the daily with the 10 and 20 EMA to get your directional bias. We've covered prices fractal. What happens on one time frame happens on another time frame. Order blocks, which is last down candles before fast up moves, which I'll draw a few out so you can see them clearly. And this is what you do, drawing below market to buy and above market to sell. If it gets broken, like I said, it turns into a breaker and goes higher. This is basic, simplified, fast, without taking years and years and years of going through ICT, which he's amazing. But he buried this stuff on purpose in hundreds of videos, and I've put the pieces together and created what you see before your eyes today. Simplified. This order block, not this one, sorry, this one. Each candle's a different name. This order block, order block, order block, until it gets broken, then turns breaker. Then you got last down candle before fast up moves in order block. So you can look to buy when it comes back down between, well, it come back down here, and that's actually like end of, that's New York. This is for NASDAQ session. So I'll drop down to lower time frames to refine our entries even more. But as you can see, all the candles that the main way to trade is with order blocks, because an order block is basically institutional buying from here. So if price comes back down into the order block, you don't want to be selling, you know, you want to try and buy. You want to see the market respect the order and buy. So these are stacking, and the order blocks stack as well. So all the way from down here, there's lots of liquidity below there actually as well. Oh no, it got taken out. So that's good to see. Liquidity stops got taken out here. This is a big order. Fast move away from the last up candle is a big order, but it got broken. So then we turn bullish. All order blocks don't get respected.
The fake order?
Yeah, yeah, I think so. I don't know, but just sometimes they don't.
It's like the last what?
The order block is the last down candle before the fast up move. But order blocks stack. So there's an order block here, last down candle before fast up move, stacking. Order block here, last down candle before fast up
Yeah,
move,
I call it.
stacking.
I like to call it a chain.
A what? A chain.
I like to call those chain because it's like completely connected.
Yeah. It's it's the same thing, isn't it? Stacking, chain, whichever you want to call it. They stack because they go higher, you know, like building blocks of the trend. So as you can see, all these order blocks are stacking. When they fail, it acts as support to go higher. So order blocks turn into breakers. And then this is so much information, it's too much. Order blocks turn into breakers. Run on stops, break of structure, which would have been here. Once the order block's broken, it turns in. So they change names. Order blocks turn to breakers, and breaker structure turns to run on stops once the order block is. Sorry, I hate Apple mice. Where was I? I start over here, I think. No. Right.
Yeah, I have a really nice trade coming up. I'd like to show you. I'm not sure if they haven't completely.
Share away. I'm just going to carry on.
Yeah.
So
I'll wait for you.
Here we were. Apple mice. I don't advise them. They're rubbish. I'm going to get a new one. Got a new Apple Mac, and the Apple mouse is rubbish because there's no wheelie on it and there's no rollie on it. So if you're a trader, never get an Apple mouse and if you do, buy a new one. This is advice because there's no wheel on it and all the top is sensitive and it rolls through your screens without you even wanting to roll through your screens, and it's very, very annoying. So back to the simple smart money concepts live. We've got a run on stops here, but you don't know that until this candle gets broken. It's a break of structure until this candle gets broken. Once this candle gets broken, this turns to a run on stops and price goes higher after the candle's broken. I've got a little move away here. Price returns again. So they're everywhere. Order blocks are everywhere. So what we would do moving forward is we would draw this off and we would just wait for price to come back down into it and see whether we're going to see whether price fires straight through it. And then if it does, we can look for sells. It'll create like a Y. I say it's a Y. Or it'll respect it and create a H. Like that. So go up, respect it, create H, go higher, or go through it, go and then come back, create a Y and go further down, taking out liquidity below market that we spoke about on this one here, you know. So now you've planned out the hour. Now you planned out the hour. You can then drop down to lower time frames and think about everything that I said on the hour, on the 5 minute, and that'll help you with your entries. Or even 15 minute. I like the 5 minute. So what I'm going to do is open a new chart again. So I have millions of charts open because I draw all over my charts. Find an hourly order block. Fast move away from the last down candle. Boom. Drop down to 5 minute time frame. When price returns to this area, you're looking for an order block. So I would draw this one off. Price moved away here, returned here. You can actually, that's very fast return. I don't like the fast returns. I don't like the fast returns, but it's still a return to this level. Like I said, price is linear, not that is horizontal. It's not, price is not diagonal or anything like that. So horizontal line, price breaks the order, comes back down into it here, and you can get in here, but it's very fast. If you miss that one, you can choose this one and you buy in here. This is very, I would be asleep to be honest, so I wouldn't buy here because it's UK time. But if you're inside of an hourly order block and it's Asia, that holds, That's an order block to buy from on the hour. Or London. Price broke this. If you join them together, that's like a 15-minute order block. Price moves away from that, comes back down into it. Here you buy here. And if you risk 1% of your account, then that's 5% of your account just there, gained, and then some, if you hold on. So price moves away from last down candle, comes back down into it, drop down to lower time frames to find an entry. Would be this one here. Buying this candle. You may have got taken out if you had a stop loss too tight. There goes the mouse again. If you do, just look to get in on the next available order block. And like I said, if something fails, if the order block fails, turns breaker, then there's an order block here. And price continues higher. Might not be a home run, but still, it's not a losing trade. Then price returns into it here, into an order block.
Live account in effect.
Price returns with an order block here, drop down to lower time frame.
Hey, just a question. Do
Carry on.
you like analyzing on that chart, or do you not prefer trading view?
Trading view, did you say?
Yeah, trading.
Try trading view, but
Stuff's really lagging. What's your?
yeah, I just started with my I started with MT4. Tried trading view. Couldn't get my head around it that much, and I just like the simplicity of MT4, and it does me well. So
No, it doesn't really matter. Yeah.
it doesn't. I can understand the benefits of trading view, but I like MT4.
It is a little easier for me, but yeah, I have a personal preference. Anyways, are you done with GBPUSD?
Almost, yeah.
I have something to show you that I think you'd love.
All right, almost done.
All right, let me know.
Might respect this and come down, so therefore I may as well take some out the market, move my stop into profit, not worry about it. The best position you can be in is a position where you've got no risk on the table. You can just let it run as long as it wants. Yeah, so drop down to from the hour to the 5, and there's your order block, and you buy in there. Stop loss just below the low, and that's a 5R trade, and then some 10R trade and beyond. Been Sam Davis, also known as Zone Trader. If you're not following me on YouTube or Instagram, check it out. Check it out.
I'll follow you.
For more trading tips to take your trading to the next level. Also, we go live every single week with our students. Every single week, there's one tonight. We go live every single week with our students, talk about the safety trade with a 9 out of 10% win rate. And if people say it doesn't work, then try it out for yourself, because it actually really does. And that's why 5 of our students so far has passed funding challenges, and myself, with this simple strategy. Easy to see, easy to trade, and yeah, 9 out of 10% win rate on a safety trade. So if you're a serious trader, check it out.
All right, would you like to see the thing I have to show you?
Yeah, I'll pop off now.
PJPY. Oh, what's up?
I'll pop off now. Cheers for joining us live, and I'll see you on the next one. Also, we hold free live calls in Discord. If you go to Instagram and click the link in the bio, there are free live calls. You can join us on more free live calls to take your trading to the next level.